charts. So in this video, you'll be learning about moving averages themselves, as well as a complete moving average trading strategy that will help you point out accurate trades. This strategy is simple enough for beginners, but so powerful that I still use it in my own trading to this day. So if that sounds interesting to you, go ahead and click that like button for me. Go ahead and subscribe if you are new. And I'll see you right after the intro and disclaimer.
Let's go.
Welcome back, and let's go ahead and get started. The first thing I'm going to do for any of you who are brand new to trading is explain what moving averages are and how we can utilize them to help us make more accurate trading decisions. Let's go ahead and jump right in. Moving averages are probably the most simple indicator that you can plot on a chart. So to give you an example of this, the three most popular moving averages are the 20 period moving average, the 50 period moving average, and the 200 period moving average. So to put this really simply, and to make sure you have a complete understanding of what these do, we're going to look at the 200 period moving average because it is the most popular. So this box you see on the screen represents 200 candles from the most recent candle printed by price all the way back to the beginning of the box. This moving average is a line plotted on the chart based on the close of the most recent 200 candles. So based on the latest 200 candles, the average price of all of those candles together is 0.8972 here on the 4-hour chart of the Aussie Canada. And the 200 before the moving average just refers to the look back period. So that just refers to the amount of candles we're looking back at. If we were on a daily chart, we'd be looking at 200 days of data. If we were on a minute chart, we'd see the average of the last 200 minutes of price when looking at our moving average price. Now we're taking a look at the 50 period moving average, and to make sure this is perfectly clear for beginners, that blue line you see is the 50 period moving average, and we're going to dive into the settings for this right now. So on the settings, you'll see inputs. Length refers to the look back period. How many candles do we want this moving average to calculate based on? The source, I never change. It's always on close, and I never mess with the offset. But if I wanted to look at a 20 period moving average, I would just change the length from 50 to 20, and that would change the moving average on the chart. But with this being the 50 period moving average, all that means is that the price of the 50 EMA at the moment being 0.9055 is the average of the last 50 candles we can see in our box closing prices. And the exact same thing applies to any length or period you place in this box. So hopefully that gives you a clear understanding of what moving averages are. Now, how do we utilize these in order to make more accurate trading decisions? Well, moving averages for me only serve two purposes. The first purpose is to help me identify the trend of a particular market, and I don't just utilize a moving average for this, but when combining the moving average with price action, as you'll learn how to do a little later in the video, it can really help to add accuracy to your trend identification. The next thing I utilize moving averages for is for areas of value that can create zones that I can potentially buy from or sell from, depending if I want to go long or short on a particular asset. The 50 period moving average is by far the moving average I use most in my trading. Now, by itself, the 50 period moving average does not mean much, but when you combine it with a very specific set of technical factors, something amazing happens. It helps to produce a profitable trading strategy that can give an edge over the market. So with that being the case, now I'm going to be showing you a full trading strategy that utilizes the 50 period moving average in combination with other technical factors that I utilize in my trading right now, and that helps me pull profits out of the market. A trading strategy is simply a set of rules or combination of technical factors that give you a perfect trading scenario that you can replicate in order to pull profits out of the market over time. So a good trading strategy should really act like a checklist where you're just checking off each rule you have until your entry criteria is met, and then you place a trade when your entry criteria is met. And yes, trading can be that simple, but the strategy is normally not the super difficult part. Normally, the difficult part is having good enough trading psychology to not switch strategies constantly or break your rules, and having good risk management. But this video specifically is about the strategy, so let's dive into it right now. As I said, your strategy should just act as a checklist. So here you can see 6 rules that we must see met in order to place a trade based on the trading strategy you're learning right now. Let's go ahead and dive in by taking a look at rule number 1. The first rule is going to help us identify the trend of the market. This is a trend continuation strategy. So in order to identify the trend, the way we're going to do that is by looking at price along with the 50 period moving average, which is the blue line on the chart, and ensuring that we have a new high in price compared to the most recent high, and ensuring that all this has happened above the 50 period moving average. If that is the case, we have rule number 1 met for a bullish entry. But we have more rules, more conditions we need to see. Rule number 2, we then want to see a pullback that gets close to or touches the 50-period moving average. So after identifying trend, our next step is to identify an area of value that's likely to push the market higher into trend continuation. And one of the ways I utilize the 50-period moving average is by using it as an area of value. And as you can see, we're just checking off rules on our checklist. And again, this is how any good strategy should be set up. Here, we do in fact get a pullback that comes down and touches the blue line or our 50 EMA. Now, our third rule for this strategy is that this pullback not only needs to touch the 50 EMA, but also must align with a structure level that's been tested at least twice by previous price. The way I normally do this is by creating an area near where price currently is, because areas of value are always zones, not just specific lines on the chart. After I have this area created, all I have to do is look back in the past and say, has this area been tested multiple times? The answer here is yes. We have 1, 2, 3 recent tests of this exact area. So at this point, we've combined price and the 50-period moving average to identify that we are in an uptrend. We've also utilized the 50-period moving average and levels of structure to identify that we're in an area of value that could push price higher and continue this most recent uptrend price has started. These are all the conditions of the strategy, meaning the next thing we're going to look for is an entry criteria. And the way I do that is by looking for buying pressure in this zone. And as you can see here, buying pressure is just a close above candle. So let's check out what that looks like right now. A close above candle is a very simple candlestick pattern formation. After all of our other criteria is met, we are in an uptrend, we're in our area of value zone we pointed out. Now we're looking for this candlestick pattern formation you see on the chart now. All a close above candle is a candle that closes above the high of the previous candle. Now, why is this something we would want to look for? Because this type of candlestick can show us buying pressure. So we already have all of our other criteria in place. We already know the trend we're in is up. We already know that we're in an area of value based on multiple indications utilizing structure and the 50-period moving average. At this point, if we see buying pressure in this zone, then from my testing and experience in the market, we have an advantage here that plays out over time. That does not mean every single time I place a trade like this, it wins. That means that out of 100 times I place a trade like this and I place it with that exact same checklist every single time, I utilize good risk management and decent position management, that over that 100 trade sample size, I will be profitable. So in this case, with this being our actual entry criteria, this is when I would place the trade. Now, outside of the entry criteria, we also need rules for stops and targets. Otherwise, we're going to be in a mess. So let's go ahead and talk about rules for stops and targets. In terms of the stop loss, I always just put it in a logical position. So most of the time, that's going to be below the swing low before that close above candle. And the reason for that is, if this close above candle does not create buying pressure and instead we see sellers start to take back control, then I'm likely wrong about what I think is going to happen here with price. And with that being the case, I want to get out as soon as possible at the least amount of risk as possible. So that's why my stop loss is going to go below that swing low. In terms of targets, for the sake of this video, we're just going to be utilizing a 2-to-1 reward to risk ratio, which happens to line up really nicely with this previous level of structure right here. So with that being the case, this trade meets all the criteria for a bullish entry utilizing this strategy. So let's go ahead and click play and see what price ended up doing. We did eventually push up high enough to hit those targets. So just to show you that I'm not just picking out random trades and that I actually utilize the same exact strategy in my own trading in my real account, you can see me actually taking profits on this exact trade. I'll put that on the screen right now. Also, this is a trade that I sent out to all the members of the TTC Forex University as an email alert. So if you're someone who's interested in taking your trading to the next level, if you want a full trading course teaching you everything from the basics of Forex trading to very advanced strategies, and if you'd like to receive 2 to 5 email alerts like this one each week, obviously, disclaimer here, they don't all win.